All right, welcome back, guys. So today's lesson is going to be about, if you haven't seen on the screen, it's going to be about the Almighty Trendline. And I say that because if you guys have watched me for any length of time, the section of my trading where I was just killing it, and I mean I was crushing it for like 3 or 4 months straight. And that was toward the end of last year. The last quarter of last year, I mean, I was killing it. And then I got away from what I was doing for one reason or another. I don't know why. But when I started to struggle, I went back and I watched some of the recordings of previous videos I've made, edited, previous trades I've taken. I record pretty much every day that I trade. And I was shocked to notice that trend lines were my bread and butter. Like they were what worked for me. As far as the confidence in taking a setup, you know, my risk is very defined if it's near a trend line, and just stuff like that. So it was very surprising to me because they're so simple, you know, they're so easy to use, and it's the simplicity that turns people off when it should be what you gravitate towards, because you want to keep your trading as simple as possible. Okay. Any charts I posted, anything that I did during that time, used the trend line a lot. And people would even joke and say, "You think you got enough trend lines on that chart, buddy?" And I would laugh, and I would think that is a lot of trend lines, but all trend lines, they matter to some group. Some group has drawn a trend line the way that you're drawing it. So when people go, "Oh, I don't use trend lines, they're subjective, and you know, one person could draw them a different way," and that's true, but a million other people could draw them that way. You know, 1,000 other people, 100 other people. You know, how many more people do you need to see the trend line the way that you do for it to work? You know, and I find that whenever I stray away from using them, my trading suffers. So I thought about how simple they are and how I should make a video about using them and why I continue to use them for people that want to dog on them and stuff like that. You'll probably still dog on them, but like I always say, if you're making money using anything, a diamond pattern, whatever you're making money, just keep doing it. It doesn't matter what people say, because this is all about you. It's about your personal style of trading, your personal, what resonates with you. And you know, if it's making you money, keep doing it. Keep doing it till it stops working, and then figure out what made it stop working. So I'm going to talk about trend lines real quick. And you know, I give you guys these videos, I try to make them no fluff. You know, I don't do crazy intros. Occasionally I'll get fancy and give you an intro, but I just like to get right into the material so that you can go on with your day or go into your chart and see what I'm talking about. So let's talk about what the trend line is. So the trend line is obviously a line that follows the trend, right? What's important to realize though is that the trend line on a market that's moving up is going to be on the bottom, okay? Because every time it touches this, it's going to be reacting to this trend line. A trend line on a market that's moving down is going to be on the top, okay? Because supply is coming in at this line to push price down every time it gets there. So this is going to be supply, and then demand is going to be pushing this up, right? Okay, so if this is the trend line, then what's this at the top? What is this line at the top? Well, you notice that if you draw another line at the top, you can form a channel around price. This line at the top of an upward trend is called a channel line. Okay, most of you call it an upward trend line, and I wouldn't call it that, because this is your upward trend line here. This is your channel line that matches that. And the same theory holds with this. Okay, this is going to be your channel line in a downtrend, okay, because your trend is down, and your channel line is the opposite of that. Okay, so now that we understand that, just get that out of the way. Okay, trend line, channel line. So a trend line can show you the direction that you're trading in, that you should be trading in. If you've got a downward trend, if you've got prices coming up and every time they come up they can't get over this, you should be trading in this direction. Okay, Now this channel line down here can give you a target. Every time it comes down here, it tends to pause. But what you really have here is you have supply coming in at higher and higher prices. I'm sorry, lower and lower prices. Okay, that's what you have here. Supply coming in at lower and lower prices. Okay, and then you have demand coming in at lower and lower prices. Okay, so that's one thing it can show you the direction of the market, whether it's moving up or down, and how you should be trading. Another thing that a trend line can show you is the urgency of the side that's in control, or when the other side chooses to get more involved. So let me show you what I mean. So if you have a trend line like this, okay, and price is just, you know, doing its thing, you know, it's doing its thing, and then all of a sudden you get a change in the slope of the trend line. This is your new trend line. Okay, price is still doing its thing. Okay, and then you get another change in the slope of the trend line. Price is still doing its thing. Okay, so what do you have here? You have urgency from the buyers. Why do we know that? We know that, so right here, the buyers were happy to let the price come back to this trend line each time before they initiated aggressive market orders to move the price up, right? This time, when it came down, though, they did not wait for it to touch this trend line. They started buying earlier. So demand that's pushing this up on the bottom of this trend line started to come in earlier and earlier. Okay, so this shows you, and this is kind of called a bump and run pattern. It comes down here, it bumps, and then it just runs higher. So this sense of urgency here by the bulls, they didn't think that they would get a better price, so they started buying earlier. Okay, and then you have the same thing here. It comes down again, and then it accelerates again to the upside. This showing you once again more urgency by the bulls, because they don't think that they're going to be able to get these prices. Now, while this slope is showing you that they are more urgent, which is more aggressive, which is what you want to see if you're trading in this direction, when this starts to happen, you start to get what I call unhealthy trend. So let's say that you can hold this trend line, this first trend line, for a good long time, right? If price would just move up in this area for the duration of the trend, you would be fine with that, because this is sustainable. You could continue to go up, you know, for a good long time. When you start to get these bumps, though, when you start to get these trend line changes, you want to think of them as the trend is accelerating, but it's also getting more dangerous to trade. Okay, because eventually the music's going to stop, and when it stops, you're going to lose one of these trend lines. Okay, you're going to lose one of these trend lines when the music stops, and you don't want to be the person that bought up here, because you don't know if it's going to come back to this trend line, if it's going to stop here at the accelerated one, or it's going to come back to the original one. Okay, so the slope can show you definitely the urgency of the market participants in the trade that you're in. But you have to be careful, because after so long, it's gotta come back. Because if the trend is unhealthy, if it's damn near parabolic, damn near straight up, right, you're going to have a problem maintaining that trend, because there's going to be selling pressure that's going to come in faster on a trend with more of a slope. Okay, with a higher degree of slope. So if this is a 45-degree angle, you go to a 46-degree angle, 48-degree angle, it's going to take less selling for you to break this new trend line right here. It's going to take less selling than it is for you to come down and break this trend line. Okay, so trend lines can show you the slope. The best way the best thing I love about trend lines is they they really let you frame the market, and channel lines, it lets you frame the market with supply and demand. So you have all these patterns that people like to trade. You have triangles, right? We'll call that flat, one that does this. Oh, those kind of look the same. Let's do this. So that's a flat one. You got that one there. You got one where this is flat and this is coming in. You've got you know, wedges. Okay, you've got flags, which just are, you know, smaller triangles really. But you have all of these things, all of these patterns that are based around trend lines. You have the head and shoulder, and you put a trend line there, and when you get this break here, you're supposed to take the trade, you know, if the volume supports that move, right? But what this is just telling you though is if you can use a trend line properly, you can really read price. So if price is coming down into this, okay, it's hitting demand. Okay, this is demand right here. Okay, so as price is coming up, hitting demand, it comes up here, and there's supply here. Okay, so supply is here, comes back down, comes back up, supply is still here, comes back down, comes back up, supply is still here. Okay, demand has been coming in sooner and sooner. Okay, so there's urgent buying, but supply, there's somebody sitting up here with enough strength to make these people here not want to buy anymore. Okay, make them slow down in their buying, or to just totally stop their momentum. Okay, so what do you have here when you get to around the apex of this? Well, a decision has to be made. They're either going to be able to buy enough to break up through this and take this guy out, or fulfill all his orders, or he's going to realize, hey, I'm not going to get better prices because the price is no longer going to reach where my orders are. I can't sit here anymore and just accept the prices as they come up, because they're not going to come up anymore. These buyers are exhausted. And what is he going to start doing? He's going to start aggressively selling. Okay, before he might have had limit orders sitting up here. He's going to start aggressively selling, and that's when you're going to get this break. Okay, and that's when you're going to get this break, and you're going to have a new downtrend formed. Okay, but all the while here, what you've seen is demand coming in. Okay, or supply coming in at higher and higher, or lower and lower prices after this break. Because once this side gets urgent, like this side was, if they can't match their urgency, you're going to get a break. Okay, so that's that triangle pattern, and it's the same thing with this one. Price is coming in here, okay, and it's getting squeezed in between demand. Let's do this. Okay, it's getting squeezed in between demand and supply. Okay, so same principle. Supply is coming in this time though at lower and lower prices. Demand though is also coming in at higher and higher prices. And that is why the symmetrical triangle, there's really no bias of where it's going to break, because you don't really know until one side really decides to up the ante. Okay, they're either going to start demanding more and more, which is going to increase that demand, push it up against here. Supply is going to be worn out and it's going to break to the top, or the opposite's going to happen and it's going to break to the bottom. Okay, but trend lines help you visualize that. Okay, they help you visualize that in the chart. Okay, and this one here, this one's kind of symmetrical too, a little more symmetrical than I like for the example. Let's see if we can make it a little different here. Let's put a flat bottom and then this here. Okay, so for this situation, you have demand coming in at the same level each time. Let's say it's coming down, it's falling. Demand's coming in at this level. Okay, and you're going to have the same thing. Okay, sellers are coming in lower and lower on this line. Okay, and why is that? Because they don't think that they're going to get a better price. They don't wait till the price gets here again to sell. They start selling here. they start selling here. This is showing you the urgency of the sellers. They're trying to get into their sell positions, okay, because they feel like a break is coming. And eventually you're going to get down here and there's going to be so much selling that it's no longer, they're no longer know that they're going to get these prices again, so they're going to start aggressively selling. That's enough to overwhelm demand that's sitting in this area and break price out. Okay. Then you have wedges or parallel channels, wedges, but wedges are kind of more like this. I don't want anybody to yell at me. Wedges are kind of like, they kind of look kind of funky, right? Like this, maybe like this. And they're basically just triangles. You know, we just call them wedges, and you just have the same principle. Okay. Price is being squeezed into the apex, and eventually one side is going to get more aggressive than the other, and they're going to break out. They're going to break out to one side or the other. Okay. So if you understand how these different patterns start to play out, you can see how trend lines are very helpful in identifying them. Okay. Why does a head and shoulder work? Because a head and shoulder is essentially a complex wedge pattern. Okay. Price is squeezed in here. Okay. And then something shifts at the top here, and sellers realize, okay, we're not going to get better prices. So they start coming in earlier and earlier. Okay. They accelerate the trend line down, and by the time it gets down here, they bounce here, boom. Okay. So it's essentially just a complex wedge pattern, but you wouldn't be able to see it unless you were able to utilize the trend lines. All right, let's get rid of some of this. Okay. Another thing the trend line shows you is it shows you where liquidity is in the market. And remember that video I made about market liquidity. It's where the limit orders are resting. Okay, where are the orders resting in the market? And they're usually below and above trend and channel lines. And the trend lines help you visualize that. So if you're trading, as soon as you start to see this and it's clear to you, you can expect a break below this to take out all of the orders here. Because what you have here is you have people that are willing buyers and sellers. Because when you buy here, you have to put in a stop, and your stop is a sell order. Okay, so if I want to buy, I want to partner my buys with your sell order, which is right below here. How convenient. I'll just come through this trend line and take this liquidity. And now if I want to go up, we can go up because now I have your orders. So they show you where liquidity rests in the market. And I'll just end this video with a chart of Tesla here to show you about the urgency of the trend lines that I spoke about earlier. Let's see if I can pull it up here. Maybe it was right behind here. There it is. So if you remember Tesla back when it had that crazy run in 2020 and 2021, it did what I talked about in the example with urgency. So it started this trend line. You had 1 touch, 2 touch, 3 touch, okay, and that was kind of sustainable. Okay, it could have continued this trajectory for a little bit, but it decided to, the buyers became more urgent in this area. Okay, and it accelerated its trend line. 1 touch, 2 touch, 3 touch, 4 touch. Okay, and then we thought that was over with, and then it started to weaken. Broke below the trend line. It became resistance, short link, came down here. Okay, and you're looking for potentially a return to here. Well, this is what made Tesla so crazy. It said hold my beer, and then it accelerated again to an even more of a degree, a 64-degree slope. So it went from 22 degrees, 33 degrees, 64 degrees, And then it even accelerated again here at the end and went to a 44-degree slope. Okay, and then you saw the breakdown and the return. So where did it want to return to after it broke down? Let's line this up here. Let's line this up and extend this trend line. It returned to the more sustainable trend line. You guys see that? This trend line goes all the way back here to where it started. So if you bought on this trend line, you were still in profit. Boom, 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 boom. And then it jumped it again. It did the same thing again. I don't even think you can put a trend line on that. That action's kind of crazy. But you can see how more unstable it got as the price increased. Okay, it broke this one here, came below it, became resistance. When it broke back above it though, it kind of made like a bump and run here and then just took off. Okay, so you can use trend lines in a variety of ways. They're very versatile. They're very simple to help you frame the market action, and that's why they're gonna be a part of my trading for the rest of my life, because when I use them, they give me like an idea that I know what's going on, even if I don't. Where'd my head go? They give me an idea like I know, I know what the market's going to do next. Even if I don't, that helps me with my trading, because I'm not second guessing myself. I'm just taking the trade when it occurs, and if it works out, it works out. If it doesn't, it doesn't. Maybe I drew a crazy trend line and no one else has drew it but me, and it doesn't work. Well, it's really simple for me to exit this trade. My stop's above here, and if it doesn't work out, I'm taking this hit right here. But if I'm using any other strategies, I'm going to be taking bigger hits. Okay, because if I were to just buy here, for instance, and there is a trend line here also. Okay, and you have that situation where the price is coming in higher and higher, supply's coming in higher and higher, demand's coming in higher and higher, and then you have a break. Okay. But if I didn't see this trend line and I'm just buying blindly here, this worked out, but where do I put my stop? Look at the distance to this trend line here. That's a huge stop. Whereas I wait till here and it doesn't work out, I don't have very far to fall before I know that. Okay? I don't have very far to go down before I know that. Here, I've got a long fall. When it breaks this trend line where I should have bought, do I hold and let it break more? Well, I don't know. But if I wait until it touches this, I can get in at a nice risk reward. Okay. And one last thing, since I'm on here and this video is already long, if you've watched me this far, you give me a like, I'd appreciate it. Help me grow my channel here. Most of my trades, my home run trades, have been when a trend line has not been respected. So I draw a trend line like this. Let's go back to paint. So my home run trades, really big trades, have come from when I think I know what's going to happen and I'm wrong, but I realize that I'm wrong quickly and I'm able to correct myself and get in the trend that's unfolding. So if I have this line here and it's being respected, and let's say I have a channel line up here. Okay, I know what price is doing at this moment. I know for the last however long this was, price came up to these levels and they were contained within these boundaries. So when price comes up again, fails to meet the top of it, well, now I can draw a trend line. This supply level here, the sellers have become more aggressive. Okay. As they push price back down, this demand that's been coming in higher and higher, okay, it's either going to be enough to break out of this, or what most likely happens is it breaks this trend line finally, takes all the liquidity down here, And based on the nature of this break, I can take this trade down, change my mind, because this was an upward sloping channel. I can change my mind and say, okay, there's a new downtrend forming. Jump into this trade here or on the retest, you know, which is a popular setup. And these have been my best trades here when I thought I knew what was going to happen. And because the trend line was broken, I realized, okay, I don't know what's going to happen. But now it's a higher probability that I'm in the wrong direction. So if anything, if I'm really strongly in a bias, it'll help break that bias and switch it. I don't have to necessarily close this trade and enter this one, but at least I close this one and I'm not waiting for this to come back up because this trend line has been invalidated. So hope that helped. And get ready for this live stream. I will see you guys there, and I will talk to you in that next one. All right, peace.